Hey everyone, welcome in to another daily editorial here on the KE Report. In this daily editorial, we're getting some more insights on the acquisition, Contango Ore acquiring HighGold Mining. Contango Ore traded on the NYSE American under the symbol CTGO. HighGold Mining traded on the TSX Venture Exchange under the symbol HIGH and on the OTCQX under the symbol HGMIF. We have Rick Van Nieuwenhuyse on the line with us, President and CEO of Contango Ore. Now, Rick, we've been chatting with you a lot about the Manh Choh Project that is 30% owned by Contango, 70% owned by Kinross, moving forward with production. We'll even get a production update here, but the most recent news, May 2nd, did catch a lot of attention, more M&A in the sector, and that is now Contango bringing in HighGold's Johnson Tract Project, also in Alaska, into your portfolio. The overall valuation here of this all-share deal is about $37 million US. That's about 51 million Canadian. It's valuing the ounces in the ground, which is little more than a million-ounce gold equivalent deposit at right around $30 an ounce US. Rick, take us through how this Johnson Tract project fits into the bigger picture here of Contango Ore having the Manh Choh Project, also the Lucky Shot Project, and now Johnson Tract.
Yeah, Corey, good to be back on your show. Johnson Tract is just a perfect fit. I've known about the asset for a long time. Actually, was discovered when I worked for Anaconda. We had a joint arrangement with CIRI Corporation, Cook Inlet Regional Inc., to evaluate their lands so that they could hone in their selection rights. And the Johnson Tract discovery was one of the positive things that came out of that. And so CIRI, ended up selecting that land. So I've known the asset for a long time. I've known Darwin for a long time. I've always thought very highly of his abilities as both as a geologist and as a business person. So it's a natural fit. It's high grade. It's high grade ore. It's on private land owned by an Alaska Native corporation. I've got a lot of history in Alaska. I know most everybody at all of the Native corporations, and I've certainly worked with CIRI before in the past. So again, it was just kind of a natural fit. It fits our DSO model. As you know, with Manh Choh, we elected not to build a mill, a tailings facility, and a power plant at site. We elected to form a joint venture with Kinross and process the ore at their mill, which means you have to have an ore grade sufficient enough to be able to transport the ore from the mine site location to the mill site. And as in the case of Manh Choh, it costs us about $70 a ton to do that, to transport the ore by truck. And that is roughly a little over a gram. So when you got 8 grams to start with, you got 7 when you pay for the transportation, you got roughly 7 to make some money on. And 7's plenty enough grade to make money on. So same idea with Johnson Tract, or JT as it's called. It's got, over 9 grams. It's a nice ore body. It averages about 40 meters width on underground mine access. And so you'll be able to, do some either long hole or combination of long hole and bulk mining on that. So relatively low, mining cost, probably $100-ish a ton. And again, you're not building a processing facility and need a huge power plant to run a processing facility or a tailings facility. So relatively easy to permit. So that's why it's such a good fit. It fits our business model perfectly to a T.
Well, Rick, let's dig in a little bit more to what kind of work you'll be doing on Johnson Tract now, because Darwin and the team at HighGold have already done quite a bit of exploration. There was already quite a bit of work done before they took over the project. What else needs to be done to get it ready to be a direct shipping ore potential?
Yeah, basically it's complete a feasibility level study on a DSO model. So first up is infill drilling. There's some drilling that can be done from the surface, infill drilling that can be done from the surface. But the bulk of the infill drilling needs to be done from underground. You also want to be underground, take bulk samples for metallurgy and things like that. Underground mines just require sort of another level of detail, if you will, from a drilling standpoint to de-risk. So unfortunately, the geometry at Johnson Tract is such that as the ore body dips down and gets deeper, in order to drill it, you have to back up so you can angle your holes over. And unfortunately, the mountain goes up very quickly. And if you look at if you go to the website, you can see in the photo there of the project site area, it's a very, very steep mountain. So, to drill the next level of holes down dip or to do the infill drilling, it's just going to cost you a hell of a lot of money. So the better alternative there is to go underground, very much like we're doing with our Lucky Shot project. Go underground, get your underground development at it in. In this case, it'll be an incline. And that's so that the water, whatever water is in the system, drains out. And then once you're underground, now you're dealing with relatively short holes to do all that infill drilling. And it'll be a lot of drilling to infill, probably in the order of 30,000 meters, I'm going to guess. So that's the next level of work you need to do. Now, of course, to get underground, you need access. So you have to permit a road from your campsite over to the portal site. And you have to then also permit your portal site. What are you going to do with your waste rock that comes out of the mine or out of the tunnel area? That requires permitting. It's nothing super challenging. Again, working on private land, especially private land owned by an Alaska Native Corporation, it's all doable. We know how to do that. We just got through doing it at Lucky Shot, where Lucky Shot is a fully permitted mine. And of course, once you get the permits to access the area, then it's just getting barging in your equipment and getting it to site and start working. So the plan would be get the permitting done this year, get the equipment mobilized in next year, and then 26 you'd be getting underground. It's going to take you about a year to get the underground access in to a point where you can get all the drilling done. And of course, it's a lot of drilling. So you don't want to be sort of mining, developing tunnel and drilling at the same time. Everybody just gets in everybody's way. So you kind of get the underground development in, stop that for a bit, and get several drill rigs in there and get the drilling banged out as quick as you can. So that would be in 27 if we're kind of caught in the timeline here.
How does that timeline relate then also to the Lucky Shot project? That's a little bit further ahead. Does that slow down Lucky Shot at all? How does that sequencing work?
It actually fits in very nicely because you'd be, while you're permitting JT, you're actually can be underground drilling at Lucky Shot. So they're almost identical programs. Lucky Shot's a lot less overall drilling. We're already underground there, so we're just drilling all the short holes. At Lucky Shot, we're drilling 20 to 30 meter holes. We've got a little bit of surface drilling that we're going to get done this summer, and then we'll get busy next year and get underground at Lucky Shot, drilling underground at Lucky Shot. So, like I said, Lucky Shot and JT they're similar. They're just sequenced about 1 to 2 years apart.
Well, Rick, this brings up an interesting point as just the overall Contango Ore story. How do you want people to think of the company? Because on one side, you've got Manh Choh going into production with Kinross, and you've got that whole story that's unfolding there, and there's still a lot of exploration upside there. But you've got these two other projects with Lucky Shot and now with Johnson Tract that are moving on a staggered timeline. Are you more of a developer that's a near-term producer? Are you a producer? How do you want people to think of the company?
I actually like to promote the concept that we're more like a royalty company. And our business model is, I'm kind of referring to it as a hybrid royalty model, in that we think we can, like Manh Choh, we've developed that and we have a total of 7 employees. So yeah, it's not like a lot of people. And that's one of the big characteristics of a royalty company is, ounces per employee, ounces of production, ounces of revenue. So that's how I like people to think about how we approach the business. We're looking to reduce risk, and as a junior company, the biggest risk that we have is you actually find something, and it takes so long to permit things, and you have to de-risk projects so much more than you did, say, 30 years ago when Pierre Lassonde first came up with his famous Lassonde curve. Post-discovery, there was a 2 to 3 year period of lull period where you did all the detailed work and the stuff that the market's not as excited about once the discovery's made. But then you got your project approved and your financing arranged and went into production 3 years later. Today, that timeline takes 10 to 15 years. And that's not enough time to keep the market's attention. So we see that space as a place for us to acquire other assets, and that's what we've done with HighGold, where they were in the exact part of the trough. And so, as a development company, as a we will very shortly be a producing company. We've scheduled the first gold pour for early July, so we'll be generating revenues from our Manh Choh operation, and it's because it's high grade and it's relatively modest capital to build, and now it's in production, so we'll be generating really strong cash flows. First order of business is paying down the bankers. We'll be doing that over the next between now and in 2026 in pretty much equal payments throughout that 2.5 year period. That will still have a significant amount of free cash flow. Manh Choh is going to generate about $60 million of cash flow a year at today's gold prices, and so part of it's hedged. We have to protect the downside there, but we get about a realized value of about $2,150 at today's $2,300 gold price. So that generates about $60 million of free cash flow a year. We pay the bankers down over the next 2.5 years, and we still have plenty of money to run our exploration and development programs at Lucky Shot and at Johnson Tract.
Yeah, that's a key. That internal organic funding option that should be coming when Manh Choh's in full production. Rick, I want you just to dive a little bit more into this direct shipping model, because that's what you're doing at Manh Choh. It reduces some permitting. It also reduces costs, but you need places to ship it to. What is the strategy? Lucky Shot and also this Johnson Tract project. What are your options when it comes to direct shipping this material?
Well, they say in our business, grade is king, and that certainly can't ring more true than if your business model is to direct ship your ore. So you have to start with a good quality ore. Lucky Shot, we have 100,000 ounces outlined at 15 grams per ton. It's about the same distance to Fort Knox, just to put some comparisons out there, as the Manh Choh project. We have the advantage at Lucky Shot is that the railroad is about 20 miles from the mine site. There's a nice rail yard right there, so we could actually load the ore into boxes and put it on the train at about a third the cost of trucking. Now you got to get it down to the rail, and you got to get from the rail up to Fort Knox. So, but just give you some ideas. That's if you've got 15 grams, you can afford to transport this stuff a ways. And certainly, the Fort Knox mill is a great facility. We have a good working relationship with Kinross. We have not, we don't have an agreement with Kinross to do anything with Lucky Shot yet. First order of business is really to define a mineable ore body, and for us, that's something in the 400,000 to 500,000 ounces range. And when we get the surface and underground drilling done in the next 2 years, we'll be able to outline that and then put a business plan around that. And obviously, we'll talk to Fort Knox and see if that makes sense. But there's certainly other mills in Alaska, and I'd say also on the coast in BC. And I'd also say, this stuff can go overseas. Smelters love flux, and they need flux, and they love flux with gold in it. So you could certainly do a business arrangement with any of the smelters in Japan, Korea, the Philippines. So that's where that model really opens up, and it's a bit of the secret sauce. You have to understand, pay attention to who, what mine's got what reserve, and there's a mine out there that's got, 2 years of reserves left. It's probably worth having a conversation with them if you've got 1 million ounces of, 10 grams that you can send their way. There's certainly a business transaction to be had there, and like we've done with Manh Choh, you don't need to own 100% of it. In today's world where capital is really tough to come by, hey, form a joint venture. Let them come up with it. If you come up with 1 million ounces and it's viable to run it through their mill, you'll figure out the business aspect of it. And that's effectively what we did with Kinross and then processing the ore at Fort Knox. It made a lot of sense. Sometimes you're going to have to make mill modifications. That they did at Fort Knox. Fort Knox mill was set up to handle 0.8 grams per ton mill feed and not 8 grams per ton mill feed. So because the Manh Choh ore was 10 times the grade, they needed to the mill. They call it mill modifications, but it's not really modifying the mills at all. The ball mill and the SAG mill don't change at all. It's all the additives that you have to add to extract the gold, all the reagents. The cyanide destruct circuit. They all have to just be literally 10 times bigger because you get 10 times more gold in the system. You need 10 times more carbon because you have to attract the gold to the carbon. You need a 10 times bigger elution circuit because you're pouring more gold. You need a bigger furnace to heat it up and pour it. So that costs $50 million, rough numbers, at Fort Knox, and it's paid for in our toll. But so there, if you've got a mill, you can certainly modify it, and modifying an existing mill and permitting whatever those modifications might be is a lot easier than starting from scratch. So that's the sort of the premise of the business model, and it's certainly been a manifestation of my part of the learning curve on finding some great deposits that are still not in production. Things like Donlin. We found Donlin over 25 years ago to find a 40 million ounce gold deposit, and it's still not completely permitted, and it's not, therefore it hasn't had a mine construction decision made yet. So I don't want to find good stuff and wait 25 years for the next one. So that's certainly how our business model has come about.
Yeah, Rick, you said it. I mean, it's sure nice to see mines getting built and put into production. And the beauty of the JV agreement that you have with Kinross is that, they're doing a lot of the heavy lifting. Let's at least get an update on how things are going at Manh Choh, though. A lot of people are excited about you getting very near to production. You just put an update out to the market. What's the read on the land there in Alaska at the Fort Knox mine?
I'll repeat a little history here, but we started mining with the grand opening in August in 2023 last year. We've been mining since. The open pit's well developed now, and we've been stockpiling ore at Manh Choh. And then in November, the first truck and trailer assemblages showed up, and so we started hauling ore in November. We've been building the ore haul fleet up since then, and basically sort of a couple of trucks and trailers put into commission in addition every week or so, and now we're up to the full complement of 60. So 60 trucks hauling ore every day and building the stockpile at Fort Knox. And as we just announced the other day, we'll have our first gold pour in early July, or early Q3, but July. So it's obviously going to be a tremendously exciting event for us. We're going to look and see if we can live stream that. So that will be the start of production. And just to remind people, we're batch processing the ore. So we effectively build up a 250,000 ton stockpile. And for a period of 1 month, once a quarter, we batch process Manh Choh ore. And then the other 2 months, they go back to processing Fort Knox ore. And then once it's you pour what's called doré on site. It's a mix of gold, silver, and a little bit of copper and a few other miscellaneous metals. That doré bar then is transferred to the Asahi refinery in Salt Lake City, and they turn that doré bar into 4/9 gold and 4/9 silver. That gets sold then by our agent, and then we get paid. So yeah, very, very exciting time for Manh Choh to finally be in production and generating cash flow and dividends back to us.
All right, Rick, thank you so much for taking us through this deal. Again, Contango Ore acquiring HighGold Mining. Also, an update there at Manh Choh in operation production in early July, hopefully, as long as everything continues to progress that direction. I'll post a link to the Contango Ore website so you all can read over those recent news releases. And please send me any questions you have for Rick on the back of any more news. Rick, thanks again for your time. We'll chat again soon.